Hello. So the Bank of England may not have as much power as we actually think. And the same goes for other central banks like the Bank of Canada, the Reserve Bank of Australia, the Reserve Bank of New Zealand. So essentially, the Bank of England has had to intervene twice or even three times. I'm losing track because they're intervening so many times per week at the situation that we're in right now. So basically, they have intervened, but this is the net result of their intervention. So let's dig straight into a chart that I want to throw up to you guys. So this is a chart of the UK 30-year government bond yield. Now, they call it a gilt, and it's really interesting because you see the UK, essentially the Bank of England, they said that they're going to go on this bond buying spree, which was around £70 billion worth of bonds that they were going to buy, essentially doing quantitative easing, pouring gasoline on the fire. They're saying that they want to fight inflation, yet here they are just pouring the gasoline on that inflation fire, telling everybody, yeah, we want to fight inflation. We're serious about this inflation fight. And literally, yeah, they're doing that. So you take a look at this chart, and what I want to show you guys is essentially they came in right here where you can see I've got the cross right now, and the bonds absolutely dropped. And as we know, the currency rallied massively on that day, and then they managed to control it for 2 days, and then literally the gilts just carried on marching higher, getting nearly to the top, to the high, which I've marked in red there. And essentially, they're coming off a little bit right now. We'll see what happens with that. But this is probably them with the last two bullets in the gun, trying to contain this nightmare that they have created in this debt-driven economy where people have just become addicted, completely addicted, like heroin, to debt. And you know, an interesting thing is, long ago, even in the Roman times, there have been instances where the emperor actually was devaluing the currency. They were devaluing the silver within the currency, and it ended up with the collapse of the Roman Empire. And I think this is where the fourth turning and everything like that comes into the mix here, because essentially we all like to believe that the central bankers and the central planners have this amazing wizardry control over the market. And the reality is they do kind of control sentiment right now, which is a big, massive thing to the markets. Do not get me wrong, sentiment is absolutely huge. But the thing is, they can lose sentiment in a split second. And that is what I've been trying to say on this channel for a long time. If they pivot, if the Federal Reserve pivots, if the Bank of Canada pivots, then people are going to lose faith in these central bankers. They got it wrong about transitory. Now they're coming in with bailouts, doing the opposite of what they said they were going to do, which is fight inflation. And what signal does that really send? That sends a signal that they have no clue what they are doing. And it doesn't take a rocket scientist from the outside looking in to look into the economies like Canada, the UK, Australia, New Zealand, the US, and you look at these economies and people are just in so much debt. Too much debt. They can't pay back all this debt. And I think people forget that a lot, that they can't pay back this debt. Like, there is too much debt outstanding. So at some point, there's got to be a debt burning event, a de-leveraging of sorts. And that is essentially what I think is the start of what's happening right now in 2022. And little do people realize it, but the significance is absolutely huge. So we're going to go into this, and I'm going to show you what they did. This was yesterday. They came in and once again intervened. So Bank of England's warning to pension Help to end worries investors. Investors remain nervous after the Bank of England insisted its emergency bond buying scheme, QE, would end this week, dismissing reports it may be extended. It said the help would end on Friday, that's tomorrow, as it made clear from the outset. Now, this is kind of interesting that they've come out with this stance saying that, hey, we are going to end this on Friday, get your house in order. Otherwise, what? We're just going to let the financial system blow up. I don't see that happening with the central planners. They love to think that they are the Wizard of Oz and that they can control everything with their wand. And the reality is, you just can't do that. You just cannot do that. So at some point, people are going to lose faith in their ability to do anything. And I think we're getting very, very close to that in England. And, you know, it's just crazy because there's so many countries lining up behind England. The UK and England is not just the only one. Canada is right there with a massive, massive housing bubble that is popping right now. So many people cannot afford their mortgages right now. Seriously. Thousands and thousands and thousands. Default rates are set to skyrocket. And what's that going to mean for the banking sector? What's that going to mean for the financial sector? What's that going to mean for pensions? What's that going to mean for politicians, central planners, and authoritarians? And this is where you have to sort of draw a line and say, well, okay, so if all this debt is going to disappear, who is going to pay for that? I'm going to tell you who's going to pay for it. It's going to be me. It's going to be you. It's not going to be me because I'm diversified enough that I'm not worried at all about what's happening. But you got to ask yourself the question, are you worried? Because it really is a time where people who have prepared in advance, it's going to show. But, you know, there's so many things that you can do, just little things. Gold, silver, many different things. Insurance, insure your money against government stupidity. Because when the rubber meets the road, as we've seen with the Bank of England, they always resort to the money printer. And when they resort to the money printer, that's going to devalue your currency. Your wealth is going to be worth nothing. And, you know, I tried to explain, and I think it's worth explaining this, but essentially what a lot of people fail to understand is the real devaluation of a currency and how it would happen. That could mean that your house is going up 10% per year in value. But if what you can buy when you eventually go and sell that house or sell those stocks is less than when you bought them, then you're a net loser. And if it's more than 10% less, which is likely to be, then you're a loser. So that is really something that people don't understand. And things like real estate are one of the most illiquid things. They're one of the most illiquid things. And in the case of what's happening with England, let me just throw up that chart again. Because this I find interesting. Like, let's say this 30-year gilt is at 5%. So you can literally buy a government bond. You're pretty much guaranteed to be paid that 5% for 30 years. Let's just play like we're going to be paid that 5% for 30 years. Why the heck, if you're BlackRock or a large financial institution, are you going to go buy property in the UK? You're not going to bother, are you? Because essentially you can buy this government bond. It's going to yield you much better. You don't have the risk associated with owning property. You don't have the carrying costs associated with owning property. So this is more appetizing to you in the UK. Now, if you look in different currencies like assets denominated in different currencies, it's different. But if you're looking at UK assets, well, you're thinking that's a pretty safe way to go and get your money. So people buying real estate in the UK right now, if there's any people buying it, are the dumb investors. It's the dumb money right at the top. And, you know, I did a video back in February, no, not in February, in March, when I was back in the UK, saying that, you know, the UK is going to follow, just like Canada, And just like everybody else, the UK will follow. And they followed, but we did not realize that they were going to come and crash the entire party when they did follow in. So it's just kind of madness. And you know, this Wall Street article, it came out, and it came out basically on September 28th. So it's an old article, but it's worth mentioning the size, because even I had not seen it mentioned anywhere in the mainstream media. And essentially, if you look at this, it says 1.5 trillion pounds in pension funds. Let me say that again, 1.5 trillion pounds in pension funds. So around 1.6 trillion dollars. When I actually worked that back, it was 1.666 trillion dollars, which just blew my mind. Halloween's coming up. But anyway, that is just insane. 1.5 trillion pounds. So imagine if they had to bail out 1.5 trillion pounds worth of pension funds, what that would do to the currency. I mean, you wonder even if the net result would even be better, because what I mean by that is if you just let all those pensions blow up and you did nothing, versus injecting that amount of money into the system, devaluing the money to that extent, what would be worse? I don't really know. That's an open-ended question. But it's kind of nuts where the UK is going right now. But I'm telling you, there are trillions of dollars at stake here in Canada, which are going to explode in this real estate market bust. And you have to think that Canada is a much smaller country than the UK, with a much smaller population and a much smaller money supply than the UK. So if they have to inject $1.5 trillion into the money supply, that will have a much greater effect on the currency in terms of being devalued. And the FX exchange rate might not even matter that much. It's just what you can actually buy at the end of the day with that money when you go to the store, when you go to the grocery store, when you go to buy clothes, when you go to buy shelter, etc. So I think this is really interesting. Another thing that they said in here that I just want to kind of wrap this up with, which was basically saying that because of the gilt situation and what's happening, these pension funds are obviously getting all these margin calls, and then they have to liquidate other things to cover the margin calls. So that could be gold, could be silver, could be oil, could be equities, could be who knows what, could be mortgage-backed securities. These pension funds have just been devouring mortgage-backed securities. We know that. And when the Bank of England, this blow-up happened and the pound tanked, essentially they stopped. The whole mortgage market just froze. It just completely froze up, as in because nobody knew how to price these mortgage-backed securities anymore because of what was happening in the gilt market and them using gilts to hedge against the risk on a mortgage-backed security. So it was a total disaster. But the thing is, the Bank of England is saying, okay, we are going to stem the system, we're going to plug holes in the boat, while simultaneously just capsizing the whole ship. So it's like, I just think you got to go back to this chart. You got to look at this chart because it just shows so raw that they managed to contain it for 3 days. That was a huge move, don't get me wrong. They managed to contain it for 3 days, and then it just marched on back up to where they'd started near enough, and they've come in, they're trying to save it again, it looks like today, and I'm sure the same thing will be tomorrow, but nobody actually knows what's going to happen here, and it's really just a guess, because once this ends, and who knows what we come to on Monday? Is the 30-year gilt up at 8%? You know, is the market starting to sniff out that the UK government could default, and then we end up in a Greece type scenario? Do we end up in a Turkey style scenario, and really Turkey is an interesting place that we should dig into in a different video, because Turkey really shows what's to come for a lot of countries, I think, because as we've seen with Turkey, they've continued to cut rates despite inflation by their CPI has been at around 50%. And people on the ground, boots on the ground, have been saying it's well over 100%. That just goes to show, again, just double these CPI numbers and you get to a more closer number in inflation. And you think about what's happening to asset prices like this, like stocks right now and real estate, and then adjust them into real terms where you're doubling the inflation rate. It doesn't look pretty, does it? It really does not look pretty. So yeah, we'll continue to monitor this situation in the UK, see what happens and unfolds over this weekend there. And that's all we can really do, guys. If you enjoyed this video, you might enjoy that one, you might enjoy that one, and I will see you guys in the next one. Take care. Bye-bye.